Elon Musk thinks a global recession could last until the spring of 2024. The billionaire entrepreneur fears the economic downturn will worsen if this decision is made. The CEO of Tesla, SpaceX, and Twitter cited a recent rise in layoffs as signs of impending difficulty. He also remarked that the excruciatingly tough challenge of keeping his firms viable during the dot-com disaster and financial crisis had traumatized him, making him worried about recessions. So, why is Elon Musk worried about the economy? Is a recession coming in 2023? And how severe will the recession be? Will the economy get better in 2024? In this video, we try to answer these questions and more, so make sure to keep watching till the end. Elon Musk is worried about the economy. For several months, the world's richest man has sounded the alarm, warning that the economy risks a devastating recession if the central bank's monetary policy remains unchanged. The serial entrepreneur has made a fresh forecast as the Federal Reserve has its final monetary meeting of the year in the coming days, and like his other forecasts, this one is highly concerning. The Federal Reserve has raised interest rates substantially in recent months, bringing the benchmark rate from near zero during the epidemic to a range of 3.75 to 4% to battle inflation, which is at its highest in 40 years. However, many analysts believe this solid monetary policy will lead to a recession. The recession will be greatly amplified. Following its December 13 and 14 meeting, the Federal Reserve announced a 0.50 percentage point increase in interest rates, bringing the federal funds rate to a target range of 4.25 to 4.5%. It's also unlikely to be the last rise for this economic cycle. The Fed is expected to raise rates at its February 2023 meeting to contain inflation, which touched 7.7% in October compared to a year earlier. Furthermore, the Fed will release its first quarterly estimates since September. This will explain where the Fed sees the U.S. economy heading in the following years. According to the CME Group's FedWatch, next week's announcement will be a 50 basis point rate rise, raising the Fed funds benchmark to between 4.25 and 4.5%, with a target rate of 5 to 5.25% by the spring, which is already widely reflected in the futures market. Musk feels that if the Fed raises interest rates as planned, it will be a significant mistake. As he has already warned, the move will send the economy into an even worse recession than was initially planned. If the Fed hikes rates again next week, the recession will be severely exacerbated, the billionaire stated on Twitter on December 9. Tesla CEO Elon Musk also agrees with renowned investor Cathie Wood, who claims that sustained rate rises would lead to deflation, a problem Musk warned about in September. The bond market appears to be indicating that the Fed is making a huge error, Wood said on December 7. The yield curve is more inverted currently than at any time since the early 1980s, when double-digit inflation was entrenched at minus 80 basis points, measured by 10-year versus 2-year Treasury rates. Typically, an inverted yield curve indicates a recession and lower than expected inflation, she noted. According to commodity pricing and significant retail discounts, deflation is a far greater risk than inflation, to which Musk responded, absolutely, on December 9. Deflation versus inflation. However, economist Peter Schiff disagrees with the two key figures. Schiff commented on Musk's tweet, "The yield curve shows investor views that the Fed would be successful in lowering inflation to 2%, says one analyst. Investors are mistaken. The Fed will only aggravate the slump, crushing the currency and rising consumer prices." The spread between 3-month bills and 10-year notes is over 80 basis points, the widest since 2001 and a troubling sign of approaching recession. According to San Francisco Federal Reserve research, a prolonged inverted yield curve has preceded all 9 recessions in the United States since 1955, making it an extraordinarily accurate indicator of financial market sentiment. Last September, the entrepreneur predicted that a spike in jumbo interest rates would lead to long-term deflation. A significant Fed rate rise risks deflation, stated SpaceX CEO Elon Musk. Deflationary repercussions can be disastrous for the economy since falling prices encourage people to postpone purchasing decisions while waiting for additional price decreases. As a result, public demand may fall and stockpiles at firms that can no longer sell their products may rise. As a result, they reduce output and investment. Elon Musk urges the Fed to cut interest rates immediately. Elon Musk has urged the Federal Reserve to cut interest rates as soon as possible, warning that the Fed's quick rises have elevated the likelihood of a prolonged and painful economic slump in the United States. Inflation has risen to 40-year highs this year, prompting the Fed to raise interest rates from near zero in March to approximately 4% today, and signaling that rates might rise to 5% next year. Higher interest rates discourage spending, borrowing, and hiring, reducing price inflation, but they can also stifle growth and create unemployment. Musk has previously warned that the U.S. economy is on the verge of contracting. There will definitely be a year or two of real recession, he stated earlier this month during his first meeting with Twitter staff. He described the economic background as dire and said Twitter confronts a difficult business climate in an email to Twitter employees. The billionaire technology CEO complained about excessive rate rises during Tesla's third-quarter results conference in October. The Fed isn't listening because they're staring in the rearview mirror rather than out the front windshield, he remarked, implying that the central bank is overly focused on fading economic statistics rather than current situations. Musk is among numerous company executives who have issued recession warnings in recent weeks. Amazon CEO Jeff Bezos, JP Morgan CEO Jamie Dimon, and Goldman Sachs CEO David Solomon provided pessimistic economic forecasts. So there you have it, guys. If you enjoyed watching this video, don't forget to smash that like button and subscribe to be the first to watch the following videos and for more finance news, guides, and updates. Thanks for watching.